So I just want to delve into a little bit more detail following my last video on the essence and nature of trading, and I'll do a separate one on the essence of investing. Look, what a trader is trying to do, and they're looking at things relatively short term. You can see this is Google stock. Each one of these bars, as mentioned before, is 5 minutes. So that's 5 minutes, that's 5 minutes, and that's how much the price moved up and down in that period. Now, critical factors I want you to know. First of all, we don't just buy low and sell high. We can also sell high in the expectation of a price falling and buy low, okay? Critical to success in trading is this. First of all, that yellow line is the stop loss. That's the point at which we'll get out. We don't have unlimited losses, and we make sure that we never add to our losing positions. Top tip. I've interviewed a lot of hedge fund managers around the world. Losers add to losers. Okay, winners never do. That distance from there to there, you can do with experience. You can do at a point which isn't so close that it's going to get stopped out by just market volatility, but isn't so far away that you'll suffer a big loss. You want to make sure that if that stop loss gets hit, what's the amount of money you could lose? Okay, that's critical. You do not ever want to lose more than probably 1% of your total risk capital if your stop loss gets hit. So make your position size varied according to that principle. Secondly, the distance from the entry to there is the same as the distance to here. That is not a profit target. Okay, only beginners and people who don't want to make much money will set profit targets. That's where you're going to add to your winning position. Winners add to winners. A winning position would be added to because you are risking the profits you've already made by the price going there to make even more profits. Okay, now that's the essence of trading. It requires a little bit more time and energy and effort. You don't have to watch the screen, because what you would do is you tell the online broker that as this price moves down, then this stop loss will track it, and should the price rebound, it'll hit the stop loss and get you out whilst you're having lunch, dinner, playing with your kids or whatever. So you don't have to be a screen slave. Right, that's the essence of trading. I've oversimplified it because we still need to know, how do we know when to go short, i.e. when to buy or when to sell. Everything else becomes automated, okay? A simple set of instructions. So how do we know when to buy and when to sell? Well, look at the description in this video. Follow me because that's a bit more detailed, and I'll cover that in future videos as well. All right. Thank you very much.